Welcome to another episode of Expert Says. Today we have a distinguished guest, Dr. Steward Doss, professor at National Insurance Academy. Our subject of discussion is of utmost importance: climate change and its risk on agriculture in India. In this episode, we'll delve into the intricate world of reinsurance and its relationship with crop insurance schemes in India. We'll explore the Pradhan Mantri Fasal Bima Yojana and how reinsurance companies view and assess such schemes. Let's start the conversation. Steward sir, welcome to Expert Says. Steward sir, how reinsurance companies view the existing crop insurance schemes in India, such as Pradhan Mantri Fasal Bima Yojana.
Thank you, and I really appreciate the initiatives taken by the government to create awareness and also provide the technical inputs relating to the area of insurance. The reinsurers in India, so they are really overwhelmed with the scheme, the features, and their experience so far has been really very good. As we can see that the last 7 years, the scheme was introduced in 2016, and we are into the 7 years, the completion. The overall loss ratio has been less than 100%. Bearing the calamity year 2018, where it crossed to over 100%, but the remaining years it has been well below 90%. So that way, the scheme has been performing very well. It has collected a premium over 30,000 crores in the year 2021 and 22, and it has enrolled over 6 crore farmers, nearly covering 50% of the total farmers. If you take the total number of farmers, approximately around 12 crores, and the scheme covers around 6 crores farmers. The actual premium rate, which was earlier 17% in 2020, has come down now to 10 to 11%. It's because of the various initiatives taken by the government. Particularly, the government has recently introduced the various business models like 80 and 110 model, 60 and 130 model, a loss ratio sharing model, which has really improved the profitability for the insurers and also surplus for the reinsurers. The scheme overall has been doing very well. And also the government last few years has taken a lot of initiatives with the applications of technologies like satellite images, use of geospatial technologies, use of mobile applications, which really has improved the quality of the yield data. And also the loss assessment has fairly been improved now, which has really brought in a reduction in the overall losses. So the reinsurers, the perception about the crop insurance scheme is really very good. As we can see that last few years, the number of reinsurers who are participating in the current scheme, PMFBY scheme, has increased to over 30 reinsurers. So that itself shows that the overall perception about the reinsurer, about the scheme is really very positive, and we have a huge scope available as a country having really about 12 crore farmers, and the agriculture contributes really 16 to 18% to our GDP. So that way, it is one of the scheme which has a huge potential in the coming years to tap.
Steward sir, what are the key factors considered when assessing risk and pricing reinsurance for such schemes?
So basically, the crop insurance scheme provides compensation to the yield loss suffered by the farmer. So when we do the pricing of the crop insurance scheme, the primary factor that we consider is the yield data, because we have to first quantify the yield risk for every notified crops at the insurance unit level. So that way, the yield data becomes very, very important. And based on the historical yield data and its trend behaviors, the claim payouts can be worked out. As we know that the claim payout is based on the threshold yield versus the actual yield, and the percentage of the shortfall yield is worked out by using this differences, and the shortfall in the yield is applied on the sum issued. That is how the claim payout is determined. So for determining this claim payout, the basic the data requirement is the yield data. Particularly, we require a yield data at a micro level, at the insurance unit level, and for every notified area, for each of the notified crop wise, we need the yield data, the historical yield data, and also the actual yield data for the season, which are estimated through the crop cutting experiments. Today, the technology also is helping the government to estimate the yield data with a better accuracy, as we can now use the geospatial technologies, we can use the satellite data, we can use the sensor data, weather sensor data, and all this data really has improved the quality of the yield data, and this is the primary requirement for pricing. So based on this yield data, the claim payout is determined, and which we call it as a burning cost. So burning cost is what we call as a pure premium rate, so which is worked out based on the claim, the frequency of the claim payouts in the past, and what is the average claim payout which is paid. So you multiply the frequency of the claim payouts and also the average claim which are paid. So we get what we call as the burning cost or the pure premium rate. And once we work out the pure premium rate, then we have to do the loading, because we have to do the loading for the data quality. Even though we get a better data quality today, but still the data is estimated based on the largely based on the crop cutting experiments which are conducted on a sampling basis. Since it is done on a sampling basis, we have to really assume the reliability of the data, and for which if the data quality is not good, then certain the data factor is applied when we work out a premium rate. So that becomes the second important factor. Depending on the data quality, we decide the data error factor, and that we load it on the yield data. And the third important factor that we consider is the agroclimatic conditions of the region. As we know that the climate risk is a very, very important risk today, and the yield risk at the insurance unit level is highly correlated with the agroclimatic conditions of the region. So we also look into the risk, the environment of the district or the insurance unit. So whether the risks are high or medium or low. So based on the heterogeneity of the regions, the risk, the deviations which are there in the regions, we can estimate the heterogeneity loading. And the third important factor that we consider is the indemnity level of the insurance unit. And the indemnity level is correlated with the risk level of the insurance unit for various crops, selected crops. So if the risk is very high, the indemnity level applied is like 70%. If the risk is low, then the indemnity level applied is 90%. So based on that risk of that crop, so we decide the indemnity level. Since indemnity level of the insurance unit for a particular crop is also another important factor that we need to look into. Then we consider the other odd-and perils which the policy covers, like odd-and perils like sowing failures, then the post-harvest losses, then localized calamities like unseasonal rainfall or convective storms or a landslide or animal damage. So for each of the odd-on peril, so we need to really work out the burning cost, and the loading is based on that. So that also is another important factor we have to consider. And the sixth important factor we consider for pricing is the catastrophic risk loading, because if the region is highly vulnerable for climate risk and they are prone to the disaster risk, so such areas wherein we require the loss experience of that district or a region would be very high. So if the loss experience are very high, so we need to protect them through reinsurance arrangements. So one of the most appropriate reinsurance, the cover that is available for protecting the catastrophe risk is the excess of loss reinsurance or the stop loss cover. So for which the reinsurer charges the premium. So the insurer has to pay in addition to whatever the rate that they finalize. So we need to consider the reinsurance support also, whatever the reinsurance premium that is charged by the reinsurer is really looked into when we decide the pricing. And then the various expenses are also considered. Expenses we can divide into policy administration expenses and the marketing and the intermediary related expenses, like the commission which are paid to intermediaries like agents and brokers or CSCs that are also loaded into the premium. And finally, the profit margin. So these are the important factors that are considered while deciding the premium rates under the crop insurance scheme.
Now let's shift our focus to the profound impact on climate change on the risk assessment and underwriting process for crop insurance.
Yes. So we know that the climate risk is no longer an emerging risk, which is already impacting, and the crop is one of the most vulnerable, business, which is highly affected by the climate risk. As we can see that in the last 5 years, the crop damages, the crop losses due to the catastrophic risk really has gone up. We can see 2018. So we had a very worst, the net cat loss year. Like we had seen floods in Kerala, we had seen floods in Maharashtra, and the earlier what we call is 1 out of 25 years that the disaster catastrophic risk profile for a particular region now has become 3, in 1 year. So we are seeing 3 floods or 2 to 5 3 floods in every regions in every year. So that's how the disaster risk exposure really has gone up. So it is one of the very critical factors that we need to look at it, because climate change is impacting the farmers' life, and the farmers are very, very vulnerable to the climate risk. As we see that in India, we have nearly 86% of the farmers are small and marginal farmers who are holding an average land size less than 5 acres. So when a disaster strikes, the entire livelihood of the farmers get affected. And as we see that nearly 78% of such farmers, they take crop loans for various agriculture related activities. When the disaster really strikes, they not only lose the revenue from the agriculture, but also they have to pay huge amount of the loans which they had taken from the money lenders, local money lenders and banks, and which puts the farmers into huge indebtedness and poverty. That's why the insurance is a very important risk solution the farmers should go in for, which provides them the primary risk protection in such kind of climate risk. So we need to have a very comprehensive crop insurance scheme to really mitigate this climate risk. The climate change not only causes the losses to the farmers, affecting their livelihood. If you can see that they also contribute to the new risk. The new risk like new diseases, new plant diseases are emerging now because of the climate variation. And the water, it also results into the water contamination, environment pollution. It affects the soil fertility to a great extent, and ultimately affecting the yield productivity. The farmer, the main risk is the productivity risk, and which is totally impacted by the climate risk. So it's very, very critical. and it also contributes to increased basis risk. So when we say basis risk, what we mean is that the insurance at a unit level, at a farm level, the farmer, suffer a loss, but that loss may not be captured at the insurance unit level because, what we follow in the PMFBY, the loss assessment method is the area approach. So particularly under the climate risk deviation, which contributes to a huge basis risk. As we know that the climate risk contributes to huge yield variation. And the yield trend also has become highly volatile, resulting into changes in the threshold yield. So since the claim payout is based on the historical the threshold yield calculations, and which affects the actual claim payout to the farmer. So that's how the climate risk contributes to huge amount of yield variation, and it also contributes to the various other risk factors like sowing failures, unseasonal rainfall impacting the localized calamities, and also if you read the recent report by Susri, we find that more than 70% of the climate-related losses arises due to the secondary perils like convective storms, and which are the main factor impacting the localized calamities. And the third important factor which contributes to the crop loss is the timing of the sowing pattern is also changing because of the climate change. We can see that the monsoon onset at every region has undergone a changes, and because of the arrival of monsoon is delayed, the farmer is not able to sow during that sowing window. And studies have indicated that because of the climate change, there has been a delay in the sowing the pattern among the farmers. Hence, it is also contributing to sowing failure risk, so which we have to really consider that. And the climate risk also contributes to price volatility. We can see that because of the climate risk impacting the production rate, contributing to huge differences in the demand and supply of the market, agriculture market. And particularly the price volatility risk is very high for commercial crops like banana, coconut, and also horticulture crops. They get really impacted drastically due to the climate risk. And so what we require is to combat the climate risk, we need to have comprehensive crop insurance. Probably the current Prime Minister's scheme is based on the Kharif season and the Rabi season. But because of the climate change, the seasonality is really changing, and every district level, the sowing pattern, the crop cultivation pattern is really changing. So we need to really consider these changes in the sowing pattern or changes in the entire life cycle of the crop, and then accordingly probably the product needs to be restructured. Then second important factor that we can consider is we need to come out with a multi-peril parametric insurance solution. So mostly what we have is a single peril parametric insurance solution, either based on rainfall or temperature or wind velocity. So what we require is, particularly due to the climate risk, we need to have multiple weather parameters considered, and not only through the weather station, but also we have to depend upon the various other sources like the satellite data and the weather sensor data, automatic weather station data. So the data has to be pulled out from multiple sources so that we can build a reliable weather grid at every location. And once we have the weather grids at every location, probably this will help in coming out with multi-peril parametric insurance, which will reduce the basis risk. This is one of the very important requirements. And we also need to come out with agroclimatic based crop insurance. The current crop insurance models need to be really restructured in accordance with the risk profile of the agroclimatic conditions at every region level, because the risk factors are also different at every agroclimatic level. And then we can customize the crop insurance products in accordance with the risk profile of those regions. Then the yield-based indemnity products like PMFBY should include the market price volatility also into the coverage, because the climate risk is contributing to a huge market price volatility. So we need to consider the market price volatility into the crop insurance scheme so that the farmer would receive a reasonable amount of compensation. We know that the current scheme, even though it is very comprehensive, but if you look at the farmer experience, the claim payout roughly covers about 25 to 30% of the cost of cultivation, even though the sum insured is 100% of the cost of cultivation. But a study indicates that the actual the claim payout experience is only 25 to 30% of their cost of cultivation is covered. So the variation increases because of the climate change. Hence, we need to really consider various factors, multiple factors, and develop a multi-peril index, a parametric insurance solution, which will really help the farmers to mitigate the climate risk.
Mr. Doss, could you shed light on how reinsurers adapt to these changing dynamics and what steps they take to mitigate risks?
Yeah. So the reinsurers, there are various risk mitigations that they can really advise to the insurers and farmers. Actually, the reinsurers, they have a global experience. They have also very, very sophisticated products, introduced in other markets. They have expertise in crop insurance, global crop insurance markets. So they provide the required technical input to the domestic insurers. They provide the necessary technical support to them. So not only in managing the current crop insurance business, but also they help them in coming out with the innovative insurance schemes like the parametric solutions, the multi-peril insurance that I talked about. The reinsurers play a very, very vital role and bringing that. So another very important factor that the reinsurer brings is they really help the insurers to stabilize their business volatility, because they provide the claim support when it really exceeds the particular loss ratio. Now, one of the popular model is like 90 by 110. So, which indicates that if a loss ratio of a scheme exceeds 110%, then the losses would be supported by the reinsurer, because when you have a high loss ratio, so we require a reinsurer support. This is where reinsurer really play a very, very important role in providing the stability to the crop insurance business. They also help in bringing out the sustainability of the scheme. And apart from that, they can help the insurers in coming out with innovative insurance products. Like as I said earlier, the crop insurance need to be made more comprehensive, covering more number of crops and particularly more number of horticulture products. We also have a huge potential of floriculture, vegetables and medicinal plants, and all of them. So the reinsurer has very good experience of managing the insurance of all these different products. So they can really help the insurers managing that. Plus, reinsurers are also well equipped in handling the technology, use of the various sensor data, use of geospatial technologies or satellite images, and also the new technologies like blockchain technology. This will definitely help the insurers to provide end-to-end automatic insurance solution. So these are some of the initiatives the reinsurers really can bring out to the Indian market.
From a reinsurer's perspective, we'll explore the opportunities and challenges in scaling up crop insurance penetration in India. Our discussion will also touch on innovative solutions and partnerships that could enhance the effectiveness of these schemes.
Okay, so if you look at what are the opportunities that are available, as I said earlier, crop insurance in India offers a huge opportunity to the reinsurer. As we know that the current scheme, even though it covers about 6 crore farmers, but still we have about 50% of the farmers yet to be covered under the scheme. As we know that you take 12 crore farmers is the total number. So we have another 6 crore farmers to be covered, and which provides a huge opportunity to both insurers and reinsurers. Second, if you look into the area which are under the cultivation, the only about 35% to 40% of the area under the cultivations are being covered. So this provides a scope for reaching out to another 60 to 65% of the area under cultivation for insurance. And the third area is, you know that the current scheme covers about only the input cost or cost of cultivation. So there is a huge need to protect the risk in the entire value chain of the farmers, right from the storage to the transportation risk, to the market risk, to the revenue loss. So the whole value chain of the farmers can be covered under the crop insurance scheme. And the reinsurer really can provide a very, very valuable technical support in coming out with appropriate products, covering all the risks at every value chain. There is also huge market available for tapping horticulture products, as I said earlier. You know that India is the second largest country in terms of horticulture production. So there is a huge business available. And even apart from that, we also have huge number of medicinal plants, teak woods, pulpwoods, the forestries, cash crops like cardamom, pepper, and plantation crops like coconut and also coffee, tea. So there are a variety of the plantation crops which are available to be tapped. And though we have a crop insurance scheme currently available to protect them, but we don't have a comprehensive scheme really to cover them, because these products, they require not only their yield risk to be protected, but also the market risk and the revenue loss to be protected under the scheme. So this is where we look for a huge market available covering the entire value chain. And we also need to come out with customized products delivering value to the farmer. So then only the farmers will come forward to insure. Because today the majority of the farmers who are insured, they are insured under the PMFBY or weather-based crop insurance scheme covering the protection risk. So there is a whole lot of the crops and their other risks need to be covered. And particularly, since their cultivation practices undergone changes, so we need to realign our coverages in accordance with the changes in the agriculture practices of the farmers. So this offers a huge potential and the opportunities to the reinsurers in the Indian market. And when we look at the challenges, so there are huge challenges that we really come across. The one is the lack of awareness. If you look at today, the awareness level, insurance awareness level among the farmers is quite low. And particularly our market, as I said earlier, consists of large number of small and marginal farmers, and where the awareness level is quite low. So we need to really come out with a localized awareness campaign, and particularly using multimedia, comprehensive multimedia plan, reaching out to these farmers, because reaching out to the farmer is one of the challenging area. So we need to come out with multiple medias to be used to create the awareness, create very attractive mobile campaigns, attractive social media campaigns in a local vernacular languages, and also maybe create mobile vans based campaigning, and participate in the fairs wherever the agriculture, the market fairs happen. So the insurers and reinsurers and intermediaries can really place an ad or posters or the radio campaigning or social media campaigning, which can really reach out to the farmers, highlighting the features of the current scheme, and also telling them about the importance of insurance, which is very, very important. Because what we observed is, based on my interaction with the farmers, many of the farmers do not perceive the importance of the insurance scheme. So that needs to be emphasized by the insurers and the intermediaries in bringing a message that insurance is very, very essential, and it really benefits the farmers in a calamity prone the regions, and also when they are stricken by the disasters, they really provide a relief. So we need to really convince them. Second challenge comes in ensuring the farmers that their losses are assessed fairly. Loss assessment is one of the critical issues, particularly when it comes to the localized calamities and post-harvest losses. There has been a delay in the past in claim settlement, to the farmers because of the challenges that they face in doing the assessment. We don't have currently. What we do is we do a loss survey conducted at the affected regions, but the loss survey may not really reflect the individual farm level risk. So we don't currently have a mechanism to do that. Only possibility is use of the technology, use of satellite technologies like geospatial technologies, use of mobile applications with the cadastral map definitely can help in doing a fair level of assessment. So then third important area is the farmer participation need to be enhanced. Even though the scheme is very popular among the farmers and the scheme covers around 6 crore farmers, but if you look at that in recent times, the farmer participation has come down. If you look into the area of cultivation, if you look at the area of cultivation, it has really come down from 564 lakhs hectares which were insured earlier in the year 2016-17. That has come down to 305 lakhs hectares. So really that is one area which we need to really look into, examine how we can improve the participation of the farmers, for which the various initiatives need to be taken, not only creating awareness, but also reaching out to the farmers in a very easy way. Probably mobile app and the use of common service centers, the various other channels like POSP can really help in reaching out to the farmers at their field level or at their village level, and also they convince them that insurance is really essential. This is another important area that needs to be looked into. The sum insured also, the coverage also has come down. So probably if we bring in more crops, the sum insured really can go up. Similarly, if we can increase the coverage, bring other risks also into the fold, that can really help in enhancing the coverage. Like as I said earlier, the entire insurance value chain can be really brought in and bring more innovation in the products. Like there is a need to introduce a revenue-based insurance scheme. We need to introduce market risk, storage risk, transport risk into the crop insurance scheme, and probably technology also can help in a very big way enhancing the farmers' enrollment. We can tie up with the various farmer producer organizations, NGOs, then banks, cooperative banks, the agriculture cooperative banks, and NABARD. Already they are doing. The business correspondents of the banks can also be tapped in a big way. These are some of the things which can really help in enhancing the penetration of crop insurance in India. Apart from that, there is a need for developing a customized policy for horticulture and plantation crops, particularly the commercial crops like banana, coconut, coffee, tea, cardamom, pepper. They require altogether a different scheme. So probably a proper multi-peril weather-based crop insurance scheme can help in comprehensively covering this risk and also bringing in market price volatility also into the insurance can really help in improving the insurance penetration. And the reinsurer also, we know that to provide technical support, but we need to really bring the value addition to the farmers, for which the reinsurer can really collaborate with the various stakeholders like the government bodies, the agriculture departments, the agriculture research institutions, like ICMA or IVRS and Krishi Vigyan Kendras, KVKs in every district. The insurers and reinsurers can collaborate with them and really, which can really help in providing the values to the farmers. And once the insurers create trust with the farmers, and more farmers will come forward taking insurance. So these are my suggestions relating to that.
And finally, we'll discuss potential interventions in this regard. What actions can be taken to address the challenges posed by climate change to Indian agriculture and the insurance landscape?
Yeah, so basically I can summarize because we have discussed what some of the points that can be taken to address this climate risk mitigation. How insurers and reinsurers can really help in mitigating down. As I said earlier, we need to come out with the agroclimatic condition-based the products. That is point number one. Second, we need to develop multi-peril, the parametric insurance solutions, which can reduce the basis risk at the farm level, for which a technology-based solution would be highly useful. For example, blockchain technology with IoT, Internet of Things, can really help in automatically taking out the related weather indicators and also sensor-based data can help in really estimating the yield risk and also improve the reliability of the indicator. So this can really help in coming out with a technology-based parametric insurance solution that can wherein the claim payout can be automated because blockchain technology, which requires a consortium among all the stakeholders. So wherein the web server of all the stakeholders like farmers, the government, the insurers, the intermediaries, and the agriculture producers would be interconnected, including banks. So the data will flow freely from one entity to another entity, and the data verification also takes place automatically. So the claim payout can be automated. So end-to-end solution can be developed using a blockchain technology. So this can help in coming out with a customized policy for various, horticulture crops or cash crops or commercial crops. Really, they will provide appropriate insurance coverage. And they also can strengthen the distribution system because, they help in reaching out to the more farmers through mobile applications. So this can really help in improving the penetration of the scheme. And the process of crop insurance can be really integrated. So with the help of the technology. And then last point is that we can, a lot of improvements needs to be done. I mean, how we can really integrate all the risks that I talked earlier, the agri value chain, how we can bring into the insurance net. That is one challenge that we require. We need to really combat with. Second is how do we bring the revenue risk into the insurance, mainly for cash crops and plantation crops. So that also is another area, risk mitigation area that we can really think of. Because once we bring the risks of the agri value chain into the insurance, the farmer will get 100% of the loss. So once the insurance scheme ensures that farmer gets 100% of the loss, the trust with the insurance will improve. More and more farmers will come forward in taking insurance. So once the base really increase, it will also help in risk diversification. It will minimize the risk and it will also minimize the premium rates drop significantly. So here the reinsurers and the insurers play a very important role in bringing out these technological intervention and also what is available in other developed markets. Like we have a captive solutions available. These kind of a captive solutions can be tried out at a NGO level or at a cooperative units level or at a farmer producer level, because these kind of captives are popular in Japan. These kind of captives are popular in Indonesia, other countries. So these captives play very, very important role in really, customizing the insurance solutions at a community level or at a farmer producers level or at an NGO level. So definitely through this initiatives, more and more farmers can be brought into the agriculture insurance net. So as I said, there is a huge opportunity which can be tapped. Apart from the agriculture, there are also other lines of agriculture products like livestock insurance and cattle insurance, poultry insurance, or forestry insurance, transportation insurance. Like this, the other lines of allied business can also be brought under the crop insurance, the agriculture insurance. If you look into the Indian market, we have around 500 million livestock population, and there are 300 million cattle are there. So there's a huge potential available. So if these insurers are also brought into the farmers level, definitely it will reduce the farmers dependency. It will improve their livelihood, because farmers requires a comprehensive risk mitigation solution, and the government, insurer, reinsurer, and the intermediaries, all of them, they can come together and provide this comprehensive risk mitigation solutions to them, which can really help in scaling up our insurance penetration in the market.
Steward sir, thank you very much for giving valuable information on climate change and agricultural insurance.
Okay, thank you. Okay, bye.
Our conversation today with Dr. Steward Doss, Professor, National Insurance Academy, has been enlightening, offering crucial insights into the world of reinsurance, climate change, and their impact on agriculture in India. As we conclude this episode, we hope you have gained valuable knowledge to understand the complexities and solutions in this vital space. Thank you for tuning into Expert Says. Be sure to subscribe and stay connected with us. Until next time, this is Ganesh signing off.